So you can see here that there's an uptrend that started around 72 cents and topped around $1.11. Actually, precisely $1.11. Okay, so now what does uptrend mean? Again, higher highs and higher lows. Okay, you can see those low points keep getting higher and higher, and those swing highs keep getting higher and higher in price. And before this massive leg up happened within the space of a couple of hours. Okay, so now you've already observed that there's a uptrend. So you do what? You long. So you enter a buy position. You're buying in an uptrend and you're selling in a downtrend. So you're buying in the spot trading on Binance, and you buy at a low price after a dip. You can buy after this dip here, maybe at 75 cents or thereabout, and then you continue your trade and it keeps going up following the trend, because there is an uptrend. Now, when you get to the point where you say, okay, I think this thing has maxed out based on the indicators available. Now, because at this point, from that $1 point, okay, you can see that RSI was pretty high. RSI was at 96, RSI 5, 96, RSI, RSI 14 already at 89. And you can tell that it's overbought and it's gonna dip anytime soon, because people are gonna take profit. People who entered, traders who entered the trade at 72 or at even 54 way back last week and a couple of weeks ago, they are definitely gonna want to take profit after this $1 mark here. So seeing that the RSI is that high, you're not going to tell yourself, I'm going to sell. So what I do is I sell my position. And when I sell my position on the spot trading platform, this is where the magic happens. I then wait. Look, you need to normalize holding your money in stablecoin form. You need to normalize holding your money. Your money doesn't always have to be in a trade. That's one of the mistakes I used to make back then, and it used to cost me, believe me. You always wanted to go from one trade to another, just back to back like that. You don't need to do that. Normalize holding your money and watching the market. So that's what you need to do. That's step 2 now. So step 2 is you sell and then you hold your money and wait for what happens. The normal expectation is that there's going to be a dip. People are going to take profit because RSI is overbought. MACD at this point now crosses, showing you that that's the signal. That's the signal that the trend is changing. The trend has changed, and so what you need to do is now short the market. So what do? You go to your wallet and you transfer your funds. It doesn't have to be all the funds that you just made from that sale, but you transfer some funds to futures and then you enter a short position on this same pair, GMT BUSD, so that you can now trade the downward trend. You can now trade or short the trade coming down from that $1 mark, plus or minus, okay? And then from there, you're in a short position and you're making profit as price comes down. Now, this is how the experts do it. They short the market when there's a downtrend and they long when there's an uptrend. And remember, when trading futures, use small leverages. Do not go for the high stuff, and prioritize saving your principal, saving your initial investment, the money you've put in. So you're going to be adjusting your stop loss so that you're protecting that money that you put in. Once it goes once price goes below an amount you're targeting, because you're now going to have to go to a larger time frame and say, okay, when should I exit the trade? When is the next point that is going to be like a resistance, or a point where I can end the trade and get out? So you can see this point here, this resistance here tells you that's around 92.9 cents. And that's around the same point it touched here before it started going up again. And on the 4-hour time frame, you can see that there's a confirmation, 2 candles. And if this candle closes on this 4-hour time frame, if this candle closes green, that's probably a confirmation that the trend is going to go up, it's going to change, but we have to confirm that, wait for confirmation. And you can see that the MACD is also going to switch. So you can see that this is a good point to close your short position on the futures if you had entered at that $1 mark. And so when you enter that point, you just get out of the trade and make your profit and wait for the next move that you're going to have to make. And you can continue the cycle, come back to the spot trading on Binance and buy the low, sell the high, go to futures, short the market, and continue like that. But keep it simple. Don't do it across too many trading pairs so that you can, to avoid any confusion or it being cumbersome. All right. Happy trading.